Hi guys, and welcome to Freckle Finance. Today I'm going to talk to you about stocks. A stock is a share in the ownership of a company. So that means the more stocks you buy, the more ownership you have in a company. For the vast majority of people, this doesn't actually get you very much ownership at all. It'll be like a percent of a percent type of ownership because most of the ownership actually goes to the executives and the owners of the company. They're not going to give away that control. Most people would not buy stocks to gain control of a company. They would buy stocks to make money off the assets and earnings of the company. Now you're probably wondering, why would a company sell stocks that give ownership to other people of their company, and as well as they lose out on the profit of their company? And the reason for that is they need to obtain more money, and they have two options. They can go into debt by the same way any individual go into debt, get a loan, or they can sell a portion of their company and gain money that way. And when a company sells part of their company as a form of a stock, they eliminate the need to have to pay interest on a loan. And the person purchasing the stock hopes that the value of the stock will increase in the future, which would be how they would make money off the stock. An individual stock, or buying a clump of one type of stock, is actually a very risky investment because if something happens to the company, they lose a lot of money, they're on the verge of bankruptcy, any of that sort of stuff, the stock will go down, for like guaranteed. If the company's not doing well, that stock is not going to do well either. And you don't want to have your money all in one stock because that's a great way to lose all your money. As well, a company could go completely bankrupt and you won't be receiving any money for that stock. It'll go to zero, no money, you won't be able to sell it for anything. However, when it comes to investing, the greater the risk of a stock, generally the greater the return. However, the greater the potential loss as well. So if you have a well-diversified portfolio and you have some more risky stocks in there, it's not necessarily as bad if you lose money on those stocks. You may gain some in other risky stocks, or just other areas of your investments can gain money, and overall you won't do that bad. As well, a benefit of stocks is that some stocks actually pay out dividends, which is giving a portion of the profits to the shareholders. Not all stocks do this. It usually depends on the company, but some stocks do this, some stocks don't. But some people will specifically want to buy stocks that have dividends because you regularly, usually quarterly, get some income directly deposited into your account from that stock. However, ETFs and mutual funds also do make dividends. It'll just probably be less of a portion because it'll be diversified over many stocks, not all of which will make dividends. So you can get dividends in stocks, ETFs, and mutual funds. The main reason people don't generally start investments in stocks directly and they wait until they have money collected up is that it costs a lot of money in order to diversify your portfolio. You need to be in different industries, you probably need to be investing within different countries, and you want to have, you don't want to just buy one stock. If you buy one stock and it costs you $5 to buy the stock and it's $30, that's expensive. So you want to also be able to buy them in big clumps but have a variety of stocks so that your portfolio is diversified and it's less risky. Stocks are similar to purchasing ETFs. You can buy them at brokerages and they are traded on the stock market just like an ETF is. However, you only pay on the purchase and the trade of the stock, and there is no commissions, MER fees, anything like that. So when you hold your stock for a long time, you're not paying any fee on that stock. You simply only pay to purchase and sell the stock. So generally, overall, stocks are considered cheaper in the long run as long as you're buying them in large clumps, because you don't have to pay those fees. And even though with an ETF the fees are very low, over a long period of time it can add up to a significant amount of money, whereas just purchasing and selling stocks in large clumps will not add up to probably that amount of money over the time period. As well, unlike mutual funds and GICs, you can't just go into your local branch or your favorite bank and just go in and speak to someone and buy a stock. I mean, they will usually have a different section of their company that you can buy stocks from, but generally you can't just go walk into a branch and say, hey, I'd like to buy a stock. You have to be part of a brokerage to buy a stock, or you can use an online self-directed brokerage, but still you have to be part of a program. You can't just go into your local bank. As well, when you're looking into buying a stock, you want to make sure that you're looking at many different brokerages, seeing their prices, what they have to offer. Many of them have different price structures depending on how much money you have to invest in stocks or how often you trade and all of that stuff. So you need to look at how you're going to be investing your stocks, how often you're buying and selling, to really decide and figure out which brokerage you should buy, because what's best brokerage for your friend may not be the best brokerage for you. As well as a big con, in my opinion, you have to do a lot of research when you're buying stocks. You can't just listen to what someone says. You buy the stock, I made 25% on it last year, because likely it's not going to make 25% next year. So you need to do your research. There's definitely a skill that comes into buying stocks, and you don't just want to take someone's word for it that a stock is good. So this is a lot of time consumption, which for many people will make ETFs more reasonable for them to buy, because they're already well diversified and you don't have to be picking and choosing yourself what you want to buy. Keep in mind that even solid stocks, ones that have been doing well for a very long time and only dip slightly and just overall have been making good money, it doesn't mean that that stock is going to continue to go on the rise. Right now, bank stocks are considered relatively safe stocks to buy, but that doesn't mean that's always going to be the case in the future. So just keep that in mind as well when you're looking at stocks, that just because a stock has done well in the past and has done well for over a decade in the past, that doesn't mean it's going to continue to do well in the past. Investments are not guaranteed. None of the previous investment history on a stock is not guaranteed. I personally have never invested in any stocks. It's not in really my future plan as of yet to invest in stocks. I feel like there's a lot of time and research and planning that goes into owning stocks, and I don't think that ETFs are that much more expensive, so that's why I'm so far just for now going to stick to ETFs. I can't guarantee this is the way I'm going to feel in the future. Maybe I'm going to want some more control, which investing in stocks gives you more control when you know what you're doing for investing. But yeah, so far, no stocks, no plan in the future. If you want to invest in stocks though, I can't stop you. As well, keep in mind if you're getting advice from friends or family or just coworkers or whatever about what they've made money in the stock market, people generally don't talk about their losses. So yes, they may have made a great gain on one of their stocks, but they may actually be in the hole overall. So just keep that in mind, and when you're buying stocks, remain as unbiased as you can. And it's very hard to do, but you also have to try to find the most unbiased information you can about specific stocks. If you find these videos interesting and informative and you want to learn more, please click subscribe, as I will be uploading videos every Monday, Wednesday, and Friday. Have a good day. Bye.